Welcome back. You're watching The Market. Now, one of the stocks that has been in focus today on the back of earnings has been Havells. It's down over 9% at this juncture and the street taking a bit of a negative view to the Q2 results. But talking about those results, the company is seeing strong recovery on the revenue front. It also has become a proxy in the switchgear segment. Vinny Motiwala had a conversation with Anil Rai Gupta, who is the chairman and managing director of the company. And let's listen into his views on the current consumer sentiment and the festive season outlook. Listen in.
So I believe, post-COVID 1.0, there was a pickup in demand, which was primarily pent-up demand. But the industrial and infrastructure segment was still very slow. But what we've seen in the last few months is that there is a pickup both in the consumer demand as well as the industrial infra segment as well. And the real estate sector doing well and giving the tailwinds for growth. So overall, most of the businesses, all the businesses are experiencing decent pickup. This is pre-festive season also. And during the festive season also, we see that the demand continues to remain strong. And there is a pickup from the trade in anticipation of a strong festival season coming up. So overall, generally, the demand sentiment is positive.
Okay, right. But, obviously there is one concern which most companies are facing is the commodity price inflation, raw material inflation, and that has continued to increase even now. Now, how much of the raw material cost has Havells been actually passed on till now? And, will the company be taking any more price hikes? If you could give us, an estimate of what is the price hikes also we'll be looking to take as of now as well?
Well, it's a longish answer to give, but I'll make an attempt because globally what is happening is there is shortage of everything, I would say, and there is a commodity increase, whether it's metals, whether it is power, whether it is freight. Everywhere inflation is really kicking in, and it's happening continuously. It's not really like once there is an inflation. So while companies also trying to bring in a lot of efficiencies in our production systems, especially helped by the fact that the volumes have also passed on the consumer price increase. By that time, the metals and commodities further move up. So there is a lag, and that's why there is a pressure on margins. I hope this, over the next 2 or 3 quarters, this should settle down. But today, the fact is that there is not enough price increase as compared to the raw material increase. Especially in products where, for example, like air conditioners, where their demand went down drastically during the AC season this year as well as last year because of the lockdowns. So there was pressure on the industry to, not to pass on the entire cost to the consumer because there were inventories in the system. So that has impacted a little bit on the margins. However, I think over a period of time, we should settle down.
Is it possible to quantify the percentage increase maybe we are looking to take as of now in the near term in the next couple of quarters or, the next quarter for Havells?
Well, Havells is in a plethora and basket of products. I think it will be very difficult to quantify here. But usually, cables and wires, for example, the cost is passed on immediately as the raw materials increase because that's the expectation and the industry also behaves in a manner. But overall, in other product categories, it usually takes time. So there will be price increases in the coming months. Depending upon product category, the timing will vary.
Right. And, obviously you did say that, there could be near-term headwinds on the margins. But, overall in the, if you count overall for FY22, what is the margin level we'll be able to sustain? Currently it's around 13% overall the margins. So will these levels sustain or could we see a more pressure coming in on the margins in the next few quarters?
No, I think, the headwinds that I'm talking about, we are already facing. So again, helped by efficiencies in higher production, higher sales, we should be able to maintain decent margins or improve from here, in fact, going forward. As I said, hopefully the raw materials situation might stabilize. And, in stability, things are okay. But, when there is volatility, then there is further headwinds. So I believe that things should stabilize in the next 1 or 2 quarters. So we should be looking at a decent margin, at least stability or a pickup from here.
Well, that's Havells for you. The stock is under pressure. It's the larger theme which has been playing out since earlier this week of margin pressures, cost pressures, catching up with these companies like ACC, Havells. Nestle's given a warning. HUL's top boss, in fact, saying we need to get serious about inflation. But back to the big story of the day. What a milestone.